Good afternoon and welcome to BizTech's Midday Market Watch. Our guest today is Oriel Morrison, Co-Founder and CEO of Rinqe and a former CNBC and Bloomberg presenter. Now, Oriel, welcome to the show.
Thank you, Brian. It's such a pleasure to be here with you.
Thanks. Oriel, before we get your insights, let's take a quick look at how markets are performing across the region. Now, it's a sea of green across the region. We've got the Nikkei trading at 26,798.76. It's up 1.38%. Shanghai Composite is trading at 436.04. It's up 1.31%. The Hang Seng is at 26,586.21. It's up 0.93%. ASX 200, your end of the territory, Oriel, it's up 1.04% and at 6,585.6. Now, over closer to home here in ASEAN, Bursa Malaysia is trading at 1,603.47. It's up 2.61%. And the Singapore Exchange is trading at 2,816.73. It's up 0.38%. Now, Oriel, are you surprised by this resilience in the markets? It's a sea of green.
It's not just today, Brian. I think I am really honestly surprised by the resilience that we've seen in the market over the past. How long have we been dealing with COVID-19? I mean, really since December last year, which was when the first cases arrived. But over the course, at least from March onwards, I've been surprised in the strength in equities across the world, but in particular in the US. Now, it's the 1st of December today. And if you look back over the month of November and have a look at some of these numbers, the Dow was up, 11.8% over the month. That's its best 1 month performance since January back in 1987. I mean, who would have thought that within COVID and the new cases that are coming through and all of those sort of things. And the S&P and NASDAQ saw their best months in April. I mean, these numbers are phenomenal.
So this is the disconnect between Main Street and Wall Street. The real economy is hurting. China aside, I mean, the China PMI numbers yesterday were great, above expectations. But the thing is, and it's the same thing within Australia, and we'll talk about that a little bit more, Oriel. Everything looks hunky dory, but the underlying economic data, it hides a lot of sins. So I'm going to ask you about very quickly about the relationship with China and Australia right now, which is going through probably its worst patch ever. But what's the view internally in Australia?
Oh, it's a very good question and quite a difficult one to answer. I think, it's worrying. What's going on at the moment between Australia and China is worrying. And of course, it all stems from, at least over the last day or so, this high-level Chinese disinformation tweet, which was shared by the Deputy General of the Chinese Ministry of Foreign Affairs. And that tweet was essentially put out to criticize Australia over the Australian military action in Afghanistan. Now, Prime Minister Scott Morrison has jumped into the fray here. He's calling the use of the image repugnant. He's using the term appalling. He's demanded that Beijing apologize and remove the tweet. Now, this isn't the first time the tensions have escalated between the two countries. Of course, Brian, as you would know, we've had months of trade and diplomatic tensions between Australia and China. This comes just 3 days after China hit Australia's wine industry. It's a $45 billion industry in Australia with a tariff of more than 200%. And this new escalation, I suppose you could call it, really came after the Australian government called for an independent inquiry into the origins of the coronavirus pandemic. And China took that as an insult and reacted in the way that we've seen and that I've just been discussing. So we are going to be watching the situation very closely, but it is a worrying one, Brian, and it does echo what we saw between China and the US over the last few years, with trade tensions between those two countries really ratcheting higher and higher. So hopefully the same doesn't happen and things calm down soon.
And so one of the key things why this is a little bit different, I think, from the US context is how dependent Australia is on China in terms of it's its largest trading partner, a large portion of exports beyond the primary commodities like iron ore go to China. China is a big source of investment in Australia's property markets. China is a big source of students as well in the education market. So China really, I mean, some estimates go as high as a 6% impact on Australia's GDP next year if things don't pan out. So that's the thing that I feel, Oriel, is something that markets are ignoring, that the risk is not being factored into Australian markets.
It's interesting, isn't it? You know, we had the Reserve Bank of Australia come out with their decision just a short time ago,
yes.
Brian, and they left interest rates on hold at 0.1%. Now, you're talking about the fact that are we ignoring a real risk to our economy? Well, potentially, in terms of the Reserve Bank and what they're saying, they don't seem too concerned. There's economists out there in Australia who are talking about the Reserve Bank of Australia now remaining on hold for the next 3 years because of inflation. And
that's right, at 0.01%.
Yeah,
really low, historically low rates.
Absolutely, they're record low rates, absolutely. And you've got sort of, the RBA sort of weighing in here and saying, well, we're not too concerned. We're leaving things on hold for the moment. Other economists are saying, well, we might get higher rates, but later on down the track because of inflation. But then you've got the Stephen Roach, the famous US economist in the US. He's talking about the fact that the the American economy, because of this escalation in cases, once again, with the coronavirus pandemic, they may see a double dip recession. Coming back to Australia and to your question earlier on, that's most certainly not what we're focused on here, regardless of what happens between China and Australia. And I think there are a few reasons for this, Brian, and one of them is our economy is doing okay. Government stimulus has been a huge support to both individuals and businesses on one hand.
Yeah, so the JobKeeper and Job Seeker schemes have really been propping up the economy. But those expire in March.
Yeah.
And so that's where critics argue that that's when the real situation will come to the fore.
Yes, absolutely. 100%. You've just hit it spot on. And then you add into that the loan holiday, the mortgage holiday that the banks gave in Australia to deal with any sort of downturn and people who are losing their jobs and all of that sort of thing. That's been a huge support. And the property market, I know this is one of your favorite things to talk about, Brian, is of course the property market in Australia. I mean, look at the numbers.
Parents love their property.
Absolutely. And, it's been quite phenomenal watching back in March. We had the major banks forecast falls in property prices in Australia anywhere between 10 and 30%. You look at the numbers now, we're up 0.8% in November. Yes. We were up 0.4% in October in terms of property prices across Australia. So it's, we're holding up okay.
So thank you very much for your insights, Oriel. We've been speaking to Oriel Morrison, the co-founder and CEO at Rinqe and a former CBS and Bloomberg presenter on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia